Okay, well, welcome to the very first LiquidityFinder podcast. And I am very honored to have as our first guest a very successful entrepreneur in the trading industry, Lars Holst, founder and CEO of GCEX, a digital prime brokerage, and prior to this, founded CFH Markets with Christian Fram. GCEX is listed on LiquidityFinder, where it is shown what asset classes can be accessed through GCEX. But Lars, why don't I hand it over to you to give our listeners a bit more background about your journey to creating the company as a digital broker and also what being a digital broker means.
Hey, thanks for having me, Sam, and honored to be your first guest, obviously. Well, what does it mean? Well, in the prime of prime space, I guess in TradFi, one of these terms that have come up in recent years, TradFi simply means foreign exchange and rolling spot, like the likes of CFH and now Finalto, of course, and other similar players. You aggregate liquidity from tier one sources, interbank makers and non-bank makers. And then you clear the trade, STP back to the market. The same we do on crypto. We take liquidity sources from tier one providers and we aggregate them. And then instead of settling bilaterally, you can use your prime broker, GCEX, to settle. You only have one collateral account and you only need to worry about one API. So many benefits. So pretty traditional in prime brokerage that you know from the TradFi space. We simply do that for digital assets.
Thank you, Lars. And so how did you end up specializing in digital assets when I back in the mid 20-teens, digital assets really hadn't taken off. And you were one of the very first people I saw that kind of created a company based around that asset class. And subsequently, a lot of our peers from this industry have moved into this area. But I see that you were, very, very first, one of the first adopters of this. What happened there? What drove that?
I would like to claim that I was early adapter, but really, I guess I was early adapter to the second round of the party, so to say. I declined looking at crypto and digital assets when I was the CEO of CFH, and that would have made me early adapter had I embraced it back then, when crypto Bitcoin was trading around $100 or thereabouts. I guess when I started looking at this post the CFH exit, it was still cost $5,000. I think in the GCEX years, the lowest has been $3,500 from memory. So yeah, in the bigger scheme, still early adapters. We were one of the very first also in the UK and doing the business and Danish VAS with ready for Europe. And we were also the first broker dealer to get the VARA license in the UAE. And we were the first broker dealer in the UAE also to get a client money account approved by the central bank now and there. So we were early adopters, but not when Bitcoin was below $100 or $1,000 even.
I regret, and I will regret to the end of the day, that I didn't embrace crypto earlier, because we had quite a few people knocking on our door at CFH, where I, of course, in my naivety said, this is never going to fly and going nowhere. And I guess if you sit on a profitable business like a lot of the established players, why would you risk anything by adapting to crypto or embracing new initiatives? And I guess that's life in summary for you, and why the old players and traditional players are failing. Because why would they risk what they have, the business, the relationships, and everything, to try something new? So why did I start here? Well, first of all, I had a non-compete clause from the exit of CFH, where I couldn't actually do what I've been doing for the 20 years before then, focusing on foreign exchange and prime of prime, STP liquidity construction. So it was a little bit out of necessity, and there was a lot of hype around it in the years, I guess, 17, 18, 19, and onwards, and before then. And I thought, hey, there's a lot of crooks in the crypto space running on crap technology, and it's largely unregulated. And that's how I started in FX 20 years earlier. And then it grows up, and then it becomes interesting. And I think that's the phase we're in now. We, of course, took the grown-up route. We're super regulated, tried to build it on grown-up technology with grown-up people. And all of this is now referred to as TradFi. So who would have used the word TradFi 5-6 years ago?
So sorry, TradFi is old FX, the FX world, and the DeFi is the new world.
Yes, so that's the translations. Sometimes you need a kind of a dictionary to translate what TradFi and DeFi and whatever.
Just on that, can we just discuss what Web3 is? I've always wondered what Web3 is when it's is that outside of the scope of what you're doing, or is it the overarching term for crypto, digital assets, DeFi, and all that stuff?
That is a very good question.
If you don't know the answer to it,
no, it's a good question, Sam. Because Web3, what is it? Is it of course it's the next generation of web. I did actually read up on it a few times. Web 1, Web 2, and Web 3, and I do get it conceptually. And yeah, I guess it is part of Web3 to an extent, like a lot of other things. The same with AI. Where are we in the evolution of AI? I must say that has also happened much faster than I expected it to do. 12 months ago, we were probably also a little bit late to the AI party, but now we are all on to the point where we talk to AI consultants, and I'm actually reading a book myself on programming in AI. So,
would you recommend it?
Yes, I would actually. And I'm not the expert at GCEX. That's more for and we do it on the development side. We have an AI actually kind of agenda overall, and we primarily use it also on the marketing side. And I'm say early signs are very, very promising.
Okay, but I'm always keen to have book recommendations. What's the book called you're reading, and would you recommend it, or is it impenetrable?
No, it's unfortunately in
Danish.
In Danish, okay. Because I'm part of the Danish CEO network, and I was attending a kind of a seminar on engineering. It's called prompt engineering, and it's a way really prompt engineering means how you can refine and optimize how you query inside ChatGPT. And I must say, I'm only halfway through it, but I can recommend any literature that you can find on prompting.
Yeah, okay. And do you actually see the results yourself if you use those prompts? Do you use prompts in a more effective manner, having read this book?
It's always easy to record growth when you come from zero, because then going to one, is that 100% growth? And I probably started out as an AI imbecile, so I'm turning into a user, and maybe in a year's time I'll be even an advanced user.
Brilliant.
But early signs are good.
Brilliant. Okay, thank you very much, Lars. So let's get back to the journey of GC Exchange. So GC Exchange was focusing on crypto out of necessity due to the non-compete with CFH, and that probably ended at some point. Then you also added your traditional TradFi asset classes, FX, and not just FX as a CFD instrument, but FX as a deliverable instrument as well. So now you're pretty much a full service house. And if I can say, it's everything bar cash equity CFDs. Is that correct? So you've index CFDs, commodity CFDs, FX CFDs, of course, but also deliverable FX as a service for corporate customers or even retail brokers and so on.
100%, I would say we are a full suite provider, almost like a money supermarket. But yeah, we avoid single stock CFDs at this point in time. reason being because there's also some legislation out in the crypto space about security tokens. And I think let's skip this single stock CFD side of things and move straight into security tokens. In the UAE, where we operate to a large extent, there is already in scope of the legislation and the rule book. So the thinking at GCEX right now is we skip the single stock CFD and we go straight into a smart contract on single stocks instead.
Interesting. So what would be the difference between that and a CFD instrument? What would be the qualitative difference for let's say, a retail broker?
The conceptual difference is that it sits on the blockchain, first of all. And the difference is that if we sit here, you and I, and I have a smart contract with some Apple shares, then we could actually exchange it over the weekend. So instead of having the counterparty risk on the provider, because that's the definition of a CFD, you trade against the house, then it's actually you can record it, you can trace it, and you can automate the whole dividend cycle. There are a lot of things. I guess that's how really the purpose of smart contracts, that you can have traceability and transparency. So I think it's the future. I said that also when we started 4 or 5 years ago, and we're not there yet, but maybe in the next 5 years.
Very interesting. It's the first time I've actually heard anybody speaking about smart contracts for equity as a displacement for CFDs. So I suppose going back to my original question about how you were kind of first to the party with cryptos, what I really meant by that was, amongst our kind of peer group in the FX industry, subsequently, since you founded GCEX and since I set up LiquidityFinder and so on, I've noticed a lot of people from the industry move from TradFi to DeFi. And a lot of people we know from the industry are now firmly embedded in crypto, 100%, or digital assets. But you were an early adopter, and fortuitously, I suppose, you've now established a fairly unique business amongst the peers, let's say, on LiquidityFinder, even where you are very much a digital asset house and a traditional FX house, which is fairly unique. But also things like you're thinking very far ahead with this kind of smart contract conversation, which is very, very interesting. So you're coming out with a lot of innovations. There was another press release this morning about skewed pricing on TradFi. Let's talk about FX, the FX pricing that you push out to clients. And let's just be very clear for those that are listening. GCEX is a B2B business. We're not talking about any retail customers here. We're talking about servicing other retail brokers, asset managers, that sort of group. So in terms of the way that you manage liquidity going down to your customers, and then the customers price trading with you, and then you're passing those prices back through to your liquidity sources. If we can talk about those a little bit, but I think it's important to make clear that GCEX is a risk-free risk-free agency brokerage, or a book in other people's terminology. So when this press release came out this morning, and I don't want to focus on this too much, but it was very interesting to me because you're showing a skewed price, but you're not a risk-taking institution. So we're just wondering how that can be done. But if you could talk a little bit about where your liquidity comes from, how you manage it, and what makes it a little bit more unique to perhaps other companies out there.
I don't think I can sit here and BS you and say, the mid price is probably the same almost everywhere. We do not run risk, and we don't put a skew on any pricing ourselves, I guess, unlike colleagues in the space. We do run a pure agency STB business, and we only work with the tier 1 providers. So I guess anyone in the latest Euromoney ranking, top 5, we work with them. I can't say any names because then the compliance and these institutions will be upset. But I think you can use them that as proxy. And then pricing with a skew, that is the holy grail in having a price difference. So if you can get one LP or multiple LPs to show a skew in the pricing that they distribute to you, then you have the Skewed that we announced today. It's because we police liquidity very firmly that we're able to do so. So there's actually no magic tricks in it as such. But the LPs, they will always protect the Skewed that they have, and if you talk to them, they're always worried about Skewed leakage. So it's something we don't just blast the market with. It's something we do selectively, and I would say at this point in time, the renewed focus on the TradFi side of the business, or the foreign exchange, if you will, is also a function of us being joined by Johnny Brewer from IS Prime 3-4 months ago, and he has same experience, if not more, in liquidity construction as I have over the years. And that's also why we're making a few announcements, or more and more announcements in the TradFi space, because we know the space, we know the game, and we think that now more than ever we can get into the game again. Other people have a different focus. Maybe they have grown a lot, and they will look after the franchise that they have established and maybe not think so much about innovation.
Mm-hmm.
We are still small, agile, and that's why we can continue to be innovative and move fast when the markets change.
I suppose it's fair to say that the differentiator that you've announced today will allow your clients to also differentiate themselves against their competition, because at the end of the day, that's
100%. 100%. Our goal is to make. That's my former partner from CFDs. He always says we want you to enable you to win in your market. That's not. I have to steal that from my previous colleague. But we enable our clients to win in their market. And if we give them a shy price, then they can't compete. So if we give them good liquidity, they can compete, they can win. Then we win together. That goes for everything we do. Our clients are only as competitive as we make them. So that's why I always say we have aligned interest with our clients, and we would just want to give them the best possible price and execution and overall service that you find in the market.
That's an excellent philosophy. And I think if you look at the whole chain of events from the end user clicking on a price at a retail brokerage, he's got to feel like he's winning. The retail brokers themselves need to feel like you're winning. You need to feel not necessarily winning, but you're in harmony, in partnership. And even you, with your liquidity providers, everybody in that chain from the very beginning click to the end execution and the fulfillment, again, everybody in that chain needs to consistently feel happy and in harmony. This is why I've always been a big believer in the A-book model or the agency model, because what you're really dependent on then is the longevity of a client's account and their success. So I think this is a very interesting innovation today, and I wish you all the best with it. But it's quite rare to see innovations like that or announcements like that. So I was very pleased to see that this morning. There was another one recently, which I'd just like to drill you on a little bit more, is the market data feed announcement from about 2 weeks ago. What can you explain how that's another innovation, please?
Again, it's like FX. I don't think it's innovation as such. It's just going back to the roots. So as a CEO and founder of one of the biggest, they started out in the MT4/5 space, US based, said to me last year, Lars, why don't you just go back to how you started CFH? Because a lot of people have different agenda, different focus. And same with market data. It's really packaging it in a new and compelling way and easy to access. So we already have clean FX data. We already have clean crypto data, both crypto derivative data, crypto spot data, and then also market data for indices. And then instead of clients, brokers looking all over the place, we just made it easy, understandable, and accessible. and you can then select yourself what kind of data you need, all cleansed, and again, regulated counterparty. That's again a good way to make our clients win in the markets where they operate.
But again, just to be clear, there's no equity data in that. I mean, there probably are there's index data, but are there any market data fees for the end client with this, or is it just a fee to you, like a monthly subscription fee? How does it work for?
No, we essentially we pay on the upstream providers.
Right.
So there's one contract with us, and we take care of the rest. I guess that's not again. That's also been the case for a number of years. But we then have the luxury of kind of having clean data both for huge range of markets. Crypto markets are hundreds and hundreds, if not thousands of instruments from them.
And actually, just on the range of instruments available in the crypto space from GCEX, where does that extend to? Is it whatever any client asks you for, you can obtain for them? Does it have to be like a minimum threshold of market cap? How does it work?
Yes, we do actually go by coin market cap. So what I think is fair, and of course we can't trade privacy coins and others. So that's regulatory constraints. But for all intents and purposes, we can stream any instrument you like. We can source it from all the tier one providers in the market. So in theory, again, hundreds if not thousands of instruments. But we do limit it to top 50, 60 by coin market cap. Right. There's also some liquidity considerations, the market manipulation. There's some compliance aspects that you need to be aware of, and then you run risk if you go into the illiquid stuff, where it's easy to manipulate the price. And remember, this is something that's traded 24/7. And the 50% of the holding sits with one wallet, then it's value risk. So we are careful.
Okay. And in terms of the 24/7 market availability, you have staff over the weekend working different offices, maintaining the feeds and so on.
Yes.
And also we had a conversation some time ago about FX trading over the weekend. That's another part of the business as well. So the deliverable aspect of your business also doesn't sleep. It's 24/7, which is also very interesting. One of the other things I wanted to ask you is about the on-ramping and off-ramping between fiat and crypto as well. It's another big aspect of your business. So what does that mean to the layman? What does on-ramping and off-ramping mean? So again, getting the crypto dictionary out, if I understand correctly, on-ramp means you translate your fiat into crypto. You trade away at crypto, and then you want to take that back as fiat, then you off-ramp.
Yes, it's another one where we had to take out the dictionary, as you said, and you just mentioned the word fiat. Until a few years ago, that was an Italian car, and it was definitely not a prestigious Italian car. And I don't want to defend Italian cars by any means. But fiat was just, if you couldn't afford anything else, then you could always get a fiat. But now fiat means money. Yes, and indeed, on-ramp is just something as simple as taking your money into crypto, and then off-ramp is vice versa. It's the same. If you want another translation, a wallet address is the same as an IBAN address. So, we should actually put up a dictionary on our website to simplify. But hey, it makes it a little bit mysterious that we have on-ramp, off-ramp, and wallets. But it is really, really simple, Sam. And once you get your head around it, then you realize it's actually 90% the same.
Right. And is it possible to on-ramp into Bitcoin directly and then off-ramp from Bitcoin into fiat? Or do you have to go through some other process? I mean, I hear a lot about Tether, I hear a lot about USDC. I think the reason for Tether and USDC's existence in terms of trading cryptos is it's like, as Olaf, one of the very intelligent writers that publishes content on LiquidityFinder, Olaf Ransom, he's used the analogy of a skater on the ice rink. When he wants to take some time off, he turns his crypto into Tether, sits on the sidelines, then comes back on and plays in another coin using his Tether deposit without translating back into fiat and then having to go through the whole process, which is a bit lengthy, probably a bit expensive. So when we're talking about on-ramping and off-ramping, it's really the conversion of fiat to crypto and back again.
Correct.
But when you're translating your crypto to Tether, or Tether to Bitcoin, or Tether to Ethereum, whatever that may be, that's you're already on-ramped and so on. You're skating around the ice rink. When you want to go home, you off-ramp, basically.
Yeah, so to us, it doesn't really make a difference if you go to Tether or USDC or any other fiat. It's kind of frictionless. The reason people use USDT is a lot of people today, they struggle with fiat accounts. And the USD fiat dollar payments and international transfers is getting increasingly difficult. And yes, there's also some fees and there's some delays involved. But in a country like the UK, where we have faster payments, or in Europe, where we have SEPA, it's really not, the fiat friction. It's not the main reason, I would say. But the USDT is something you can move around freely without restrictions. And we accept currently 20 fiats. So on our side, we are indifferent whether you do USD or USDT or USDC for that matter, or dirham or similar. And then you can move that between 60 cryptos instantly.
Right. And clients can onboard with you using USDT as collateral directly without having to convert that via you with, whatever. So they can come to you with a Tether position or a USDC position and open an account at GCEX for their brokerage.
Yes, absolutely. So we have a VAS license in Denmark. So we are ready for MiCA, the new directive in crypto assets. And they can also onboard with us in the UAE. From that part of the region, we accept international clients, but only professional clients, as I said earlier.
Some time ago when we spoke, you mentioned something which I'd never heard of before, which is know your token. And I suddenly thought, actually, that's quite revealing, because for a crypto firm to mention, when you onboard somebody, you go through quite a stringent compliance process, touching on the regulators that you work with. What does know your token mean, and how does it impact onboarding a client? What does it mean, know your token?
I guess the onboarding of a client, whether it's for the investment firm or for the VAS, one of the crypto companies we have, is kind of identical or similar at least. So the KYC, identifying the UBO, etc., the source of funds, the source of wealth is similar. But KYT is, know your token. It's really that you also need to verify the source of the token. And we use a tool, I think I'm allowed to say that, we use something called Chainalysis. There are other providers on the market whereby you can go back and trace the history of the token, and then you can detect whether it's from stolen funds, from gambling, from pornography, or arms dealing, or what do I have?
Sorry, so how far back in time does that go? Does that go back to the origin of the mined coin?
In theory, back to the minting, yes. So it's really forensic. It's also very, very complicated. But in a way, the safety and the AML around cryptos is much better than around fiat, because you can give me cash today, or you can transfer fiat to me. There's no way that I can go back and see whether that came from Escobar, or he's dead, of course.
Yeah.
But
might have done originally, could have been.
Maybe he mentioned the dollars originally. You know what I mean? And that doesn't happen in fiat. So I would say the safety around crypto also, if we think about the future, it's much, much better than we know from fiat.
Interesting. And in that respect, can we touch on central bank digital currencies, CBDCs? Or do you have a view on the uptake for that, or does that not really come into your world at all, CBDCs? I mean, I know some countries are quite advanced, and Europe's making some progress there. Does it really sit out of your remit, discussing CBDCs? Or
I need to add that to my dictionary. So I have heard about central bank tokens. I don't know whether they serve a purpose, it's not very often that I hear the name innovative and central banks mentioned in the same sentence. So I'm sure the bank will thank you for that, Sam. In the UAE, they have just actually given the permission to a dirham stable token.
Yeah.
But in again, the UAE, where you can do instant dirham transfers between accounts with 10-minute delay or 15-minute delay, cleared and processed by the central bank. What's the purpose? Here in the UK, we have faster payments where we can do sterling transfers instantly, SEPA. I think, so, yes, the innovation also needs to serve a purpose. I can see, they want to gain control and oversight.
Yeah, that's why I was asking the question, because there may be traceability of what happens with a digital currency, and there may be a bit more visibility on what's happening in the economy and so on, based on the blockchain that is implemented for central bank digital currencies. But yeah, I mean, what is the actual value? And I think there's a very interesting, I'll try and find the link to it, but there was a very interesting Q&A session in Parliament recently where the person responsible for the CBDC project in the UK was asked repeatedly, so what is the purpose? What is the value? And he struggled to find an answer. He was just assumed that the program was going to go ahead, but there wasn't actually any really considerable purpose for the project. Not stated anyway, no real headline purpose. So
no wonder he struggled, because I consider myself to be semi-intelligent. I can't give him the answer either.
Yeah. Circling back on the kind of present day, and what's looming up fairly soon is the US election, presidential election, and a lot of people are preparing and bracing themselves for any volatility in that space. I mean, are you geared up for this? And if so, are there any special measures you need to take with regards to crypto or FX? I mean, I presume it's just going to be another day in the office, or is there going to be some?
Yes, we from memory, we just contributed to an article on this subject. Yes, it's another day in the office. I think we, of course, like any broker, ultimately we live off volume.
Yeah.
So of course we would love the uncertainty and the added volatility leading up to and hopefully post the election.
Sorry, Lars, to interrupt. On that point, has the volatility in the crypto space been lacking recently? Because I'm hearing some people say there's not been much volatility around. I mean, it's kind of leveled out over the last couple of months. I mean, over the last year or so, there has been volatility. But are you saying that the crypto space in general hasn't been that volatile? Or has been? I mean, I'm not closely.
Well, I guess in the recent days and weeks, we've definitely seen upwards price movement. So I guess volatility is a relative term. Where are we in the bigger picture? Same level as Turkish lira, I don't know, or thereabouts. It's more volatile than Eurodollar, because Eurodollar is flat as anything. But I think it's kind of picked up a little bit. We're not too far away from all-time highs from memory. But yeah, it's not like we see the movements of 5,000-10,000 a day.
Yeah.
But yeah, I don't know. There is of course a correlation between gold, Bitcoin, and the dollar. So it will all be impacted by the election.
I was just about to ask about gold. I mean, gold is breaking new highs almost daily, weekly certainly. And if you were to choose to put your money into gold or put your money into Bitcoin, I hate to ask you this, but what would you do personally? This isn't a recommendation, by the way, to anybody. Just there is an army of people out there who are gold fanatics. There's an army of people out there who are Bitcoin fanatics, and they'd say, this is the hedge against systemic risk. It's gold or it's Bitcoin. I think Bitcoin, obviously being a bit younger, and gold has traditionally always been the safe haven asset, and it's proving at the moment to be kind of unstoppable. But I suppose the question is, I shouldn't really ask you this question. It's not fair. But where if you were to see in, let's say, 6 months' time, which one would be the one that's kind of more highly valued than today? Would that be gold or Bitcoin?
I think, unfortunately, there's a high correlation. So from a portfolio construction point of view, you should probably go long one and short the other. And really, you should probably have a little bit of both. But what is the safer bet?
Not financial advice.
No, we're not giving advice or recommendations here, but personally, I'm fairly long both. But hey, I'm also old, so been long for 20, 25 years. So whatever.
That is probably the best way to answer that question: is go long both.
Yes, go long both, and stay long for the next 10 years. Then I'll not give you any guarantees, but I think then you're pretty safe.
Yeah.
Hey, just one other question. So the regulators in the US and the regulators in the UK and probably in Europe don't seem to be that crypto friendly, whereas in Dubai, UAE, Singapore, probably Hong Kong, I'm not sure, are much more open-minded, encouraging of the crypto industry. So where can you see center of gravity or gravities of crypto moving in the next, let's say, 5 to 10 years? Is it? I'm certainly seeing moves into Dubai. And you're there now. What do you? Because you've got offices in London, Dubai. Where else have you got offices? Copenhagen, of course. Where do you see the regulatory welcome sign being up on the door more than elsewhere?
That's a very good question, Sam. And I guess a little bit of background to also when we started. The Prime Minister when we started was Boris Johnson. And on both, there's been a few in between then and today. And, his statement was, open for crypto. And I think Sunak, he was on the same track. But hey, it's back to this. Why would you take risks if you have something that's working? And the financial services system in the UK, broadly speaking, has been the gold standard for regulation. A lot of international brokers always aspire to get regulated here. So why would the UK and the banks here take any risks on rocking the boat? The same could be said about the US. Why take too much risk? Even though I would say the crypto adoption in the US and the regulators there can depends on whether it goes the Trump way or the Harris way. They both seem to be again pro crypto, and the biggest players they also have a strong presence in the US. I don't think I can mention any tier one global player that originates from the UK, but the US will go down the same route as they did in FX over the years and almost any other product and push people out of the market. Absolutely. And they will only allow US-based players to operate in the US market. I don't know how they can say that's good for competition, but that's the way it will go. You talk to anyone already today in the crypto market, they already state already, yes, we do not do business in the US, because they simply can't be bothered to take a risk or deal with the US regulators today, tomorrow, and in the future. So where is it open for business? Well, again, maybe it gets a bit too macro now. But hey, where do we see growth and change in the world? I read in a CEO report by 2040 or 2050, the top 20 economies in the world. And that's not going to be the UK. It's not going to be in Europe. It's all going to be in the GCC, the Middle East, and Asia. And that's, of course, where we need to go. If you want to be on a growth trajectory, then you're not targeting Germany, or France. I'm sorry to say it, or Denmark, or Danish. So that's not where you see the growth. We are stagnant or in decline. That's just a fact. We will be a smaller part of the global economy going forward. So that's why we have also made it clear we want to position ourselves to start with in Dubai for the GCC and Southeast Asia and beyond. So where do I see the welcome sign on the door? Well, for us right now, it's very much so in Dubai. but I can also see ourselves going to another hub in Southeast Asia in the next 12 months.
Okay, very interesting. So it is the UK going to be getting its act together to try and win that competition against the Asian draw, or are they just going to be asleep at the wheel and let people relocate to Asia and miss out?
When you meet with the regulators in the Dubai, whether that's the DFSA or the VARA or the ADGM, they all have a background from the FCA. So I can only say they seem to be super competent. They have a much better accent than I have. So they speak proper English. So, and when you refer to the rule book or anything, because I'm mainly familiar with the FCA rule book, but if you refer back to the UK rule book, they know exactly what you're talking about, because they all have a background from it with FCA.
Right. Okay. Well, Lars, thank you very much again. It's a very interesting area. Thank you. Welcome. Well, Lars, I'm really grateful for your time. It's been a really interesting chat. I do need to get that crypto dictionary out. I hope I got away with some of the terminology there, but it's been really interesting talking to you. And thank you very much for your time.
Yeah, thanks for seeing me there.